Eric Mwadhi, Mwadhi.com. Let's take a look at world markets with market analysis for the weekend of March 19th and March 20th, 2016. We begin by taking a look at Asia. We can see that Japan was slightly up, slightly down. China was down. Other markets pretty much to the upside. We take a look at European markets at the close of Friday's session, and we can see a little bit of a mixed bag, slightly down in the FTSE, and the DAX and the French CAC were up slightly. With about 2.5 hours to go, we can see that the Brazilian market is down, and so is the Canadian market, down 0.7%. And here US markets with about 2.5 hours to go, Dow is up 0.47, Nasdaq up 0.29, S&P 500 up 0.25, gold and crude oil are down about 1%. So let's take a look at world markets. We begin by taking a look at the Australian market, and the reason why I'm beginning with the long-term monthly chart is because pretty much all markets across the globe have the same looking monthly chart. So all of these charts that I'm going to be discussing here are going to have the same look and feel on their monthly charts as we discussed in the past couple of weeks. Markets are coming back and testing this level where they have been finding good support. If you go and check the most recent lows, for example, this low here corresponds with the low there, this double bottom for the lows there, and then the lows coming off 2008, 2009 have come on this level. So right now we are looking at the Australian market, confirming that the monthly chart continues to be strong, and this is true for many markets across the globe. Monthly charts continue to be good, but we are having problems popping up on some of the weeklies and the daily charts. For example, take a look at the Australian market, and if you take a look at the movement of the highs here, the RSI did break a trend which was somewhere here slightly above 50. And that trend break has become a problem since that break in sometime in May of 2015. So we can draw a line there which also happens to be around RSI 50. Since then, you can see that here double top resistance for the highs there. We tagged that level and stalled for the highs there. Also the highs of December came on that level, and right now we're looking at the weekly chart, still showing some type of resistance around here. So if the market is to move higher, it needs to clear the red line, and it needs to clear the level above RSI 50. Otherwise, resistance on this line here could suggest that after a nice recovery of the lows here, potentially the next swing trade could be to the downside if resistance is confirmed on this weekly RSI line. A look at the Australian market here reveals that it's coming back to a level of resistance on the daily. If you take the daily highs on the RSI, so that's one layer of resistance, and also the line that has been a problem over the last year or so. So coming back to test those two lines, if the market is to move higher, it does need to clear those two lines. Otherwise, right now we are looking at two lines that are causing a problem, in my opinion, suggesting that we should not be too surprised if at this rate this is resistance and we get a pullback. Keep in mind that we are coming back to test a declining 200-day moving average. So market bulls would like to see the market eventually clear those two lines. Otherwise, for now, I think we are looking at more than likely resistance and a pullback. If we take a look at the Japanese market, we can see that it's coming back to test the recent weekly break. So right now, struggling to hold above the break, and this break is what brought the market off the highs of December. We haven't been back to those levels, and right now we seem to be struggling to hold above that red line. Again, if the market is to move higher, it needs to clear that level. Similar to that would be the price moving above the recent weekly closing high around that 1700 level or 17,000 level. If the market can stay above that, and also stay above 17,000 and move above the red line, there's a chance for the market to recover. But as of right now, we are also looking at the daily, which is also showing resistance. If you take the top side of the daily RSI, the market came here over the last couple of days, hit that level. We seem to be stalling, and also we are coming back to test the previous break. So this break off the highs there, we can see that began with this break here, the break in the RSI there, brought the market off the highs, we can draw a line from there, and right now we can see that that line is also becoming a problem. As of the last week or so, the market has hit that line twice, here and again here. So that is a double top on the daily RSI. So again, we see two lines of resistance on the daily. If the market is to move higher, it needs to trade above those two lines. So net, this looks like resistance until we can clear those two lines. And again, it bears repeating here that the weekly charts continue to look great. So the weekly charts are still good, as you can see here, coming back to test the recent breakout. So this breakout here, beginning part of late 2012, from this move here in the 9,000 area to the highs here above 20,000. So this is where the move began, and we can see that on this monthly chart, as we discussed last week and the week before, I believe, the market on a weekly chart has come back and seems to be holding exactly where it needs to. So here again, we are seeing monthly charts continue to be strong, and if the monthly charts can hold, then month to month markets could still move higher. Let's take a look at the Indian market, take a look at the Nifty. And on the weekly chart, we see that it's come back to test the top side of its weekly RSI, and I think still struggling to hold above this line. So we can see that the weekly is causing a problem. As of right now, we take a look at the daily for the Nifty, and we can also see that here is a situation where it could break if it wants to, or break out to the upside. And what we have here is on the daily, the market is coming back to test this line, which has been a problem over the last year or so. Resistance on the line, which is there, resistance here for the highs there, and resistance here for those highs. Even this here was resistance for the highs there and the highs of March, same thing. So here, if the market is to move higher, it needs to clear that red line. Otherwise, again, if the daily does not break out, and if we see resistance confirmed on that red line, then that suggests the next swing trade is down. We also see that on this daily chart, we managed to move above the recent daily closing high, and the level we were watching there was 7531.80, and the market did successfully stay above that this past week, which is a sign of a market that continues to trade with an idea that it wants to move higher. So as long as it is above 7531.80, you can give it the benefit of the doubt. And if the market was to move back below that threshold, again back below that number, would be a sign of a weak market. But as long as it is holding above 7531, one can assume the market generally is looking like it wants to move to the upside. We take a look at the hourly, and on the hourly we see a little bit of a problem here because we've been making incremental highs in the price, but the RSI is not necessarily moving higher. So this negative divergence might be a problem. Also, we can see that negative divergence on a 30-minute chart. As you can see, 30-minute chart here making new highs in price, but the RSI has not made fresh highs. So this could be a problem short term, suggesting that net on a short term basis, this market is likely to pull back after this negative divergence. If we take a look at the South African market, we can see here on the long term monthly, here was uniform activity below 50 and back above 50 for this nice re-entry, and even this was uniform action in 2008-2009 for re-entry somewhere here once you move above RSI 50 on the monthly chart. And over the last month we've come and hit that level. In fact, the last 2 months we held on the 50, suggesting that this might be the reason why the market is up 11% this month alone. So the South African market here seems to be holding very well, and again another world market showing support on its monthly chart. And as long as that's the case, one can assume that month to month markets look okay. Take a look at the weekly, and the weekly here is coming and moving very well since the lows of January. Nice recovery, in fact very strong recovery, but now coming back to challenge the break point. So it broke down here, and this break point on the RSI in May 2015 brought the market off these highs, and so we are coming back to challenge that line there. So if the market can continue holding above the red line, that's good. Otherwise, if we stall back below that red line, then somewhere around here is a trap, and the next swing trade is going to be down. So we'll see which way the market decides to go, but looks good on a monthly chart. Weekly charts are becoming a little bit suspect. Also on this weekly chart, you can see the possibility of resistance on the top side of this weekly chart, coming back to test that line. If we can't move above that line on the RSI, then week to week, there's a chance here that this is where it stalls and pulls back. If we take a look at the French market on the daily, the RSI on the weekly is also coming back and showing resistance on this line, and also rejection at the 50 level on the weekly RSI. So this looks a little bit like a pullback is setting up. Otherwise, market bulls would like the market to come and clear that resistance. For now, we don't see that. All we see is resistance. One can assume that at this rate, we should expect a pullback. If you take a look at the daily for the French market, you see we've come back to the same level that has been a problem right there. Recently, we saw a double top on this red line, which corresponds with the break also off the highs here on the red line, resistance on the red line off the highs there, and resistance off the red line off the highs there. So right now it looks like a pullback unless the market can clear that red line. So for now it looks like a pullback. We take a look at the German market on the weekly, and the weekly for the German market is also coming back and showing topside weekly resistance on the RSI. Until we can clear this line, one can expect a pullback. Take a look at the daily. On the daily, there's two lines of resistance. The first line is the line off the highs. There was a break here on the RSI that broke the market off the highs of April last year. We can draw a line from here, and we can see that it's been giving us recent highs over the last year. Every time we hit the red line, the market does stall. Here we broke through that red line also for this movement of December highs, and coming back over the last 2 weeks, hitting that level twice. Right now looks like resistance. So that's one layer of resistance, and the other layer of resistance is the line connecting RSI highs, coming back again, hitting that line. So right now, until the market bulls can find a way of breaking out above those two lines, one has to assume that based on this chart, more than likely the next swing trade seems to be down again, unless we can clear these two lines of resistance on the daily. If we take a look at the FTSE daily, we can see again there's a line that has been a problem over the last year. As you can see, that red line has been a problem, and also it connects the top side of the daily RSI. So we are seeing daily charts showing a lot of resistance. We've hit that a couple of times over the last couple of weeks, and so market bulls would like this eventually to be clear to the upside. Otherwise, for now, if you are bearish in the market, you'd like this to be confirmed as resistance, and once resistance is confirmed, it might suggest that the next swing trade is down. So right now we're looking at a market that is struggling to move above those two lines. We have to assume until we see a breakout that eventually the market would have to respond by going lower. In fact, if we take a look at the hourly chart for the FTSE, we can see improvement in price over the last couple of weeks there, but the RSI really has not made any fresh highs. In fact, the RSI has come back and hit the negative divergence line throughout the process, suggesting that at this rate, this hourly chart suggests that the next swing trade for the FTSE, and probably for most European markets, is going to be for some type of downside action. And again, keep in mind the monthly chart for the FTSE continues to be good. If you draw a line where it's been finding support over the last 10 years or so, you can see here, going back to 03, it held on that green line. It moved back above the green line in 2009 for the entry there, touched that level there for the highs of 2011, and over the last 2 months or so, in fact going back to late 2015, we've hit that line twice. This might be a good double bottom on the monthly charts. So again, worldwide monthly charts are good, but we are starting to see resistance being confirmed on daily and weekly charts, suggesting that maybe month to month the market is okay, but week to week there might be some type of a pullback that is going to be in play here in the coming weeks or so. If we take a look at the Canadian market on the monthly, just want to show that it's come back and is finding support exactly where it should be finding support. As you can see, coming off the lows of 1990, it held that line. Coming off the lows of 92, 93, it held there. We touched that same level in 98. We touched that same level here off the highs, off the lows of 2003 for a nice entry in the market there. We went above the green line and back above it with uniform action for a re-entry in 09. And even off the lows here in 2011, we came close to the line. Lows of 2012, we hit that same line. And here, 2016, the market has gone below the green line and back above it with uniform action, suggesting that month to month, this is a good looking chart. That month to month here, suggesting markets could be moving higher. Having said that, we go back to the weekly charts, and here's another market showing potential for resistance. If you go back to this break in May, and that break brought the market off the highs of 2015, we can draw a line from here, and you can see that the market is coming back after a nice couple of weeks, coming back to test that line. As long as we show resistance on this line, one has to assume that the next swing trade is down. If we take a look at the hourly for the TSX, we can see here an improvement in price highs over the last couple of weeks, yet the RSI made a lower low. So this negative divergence could be a problem in the near term, suggesting that this pullback that began, I believe, on Thursday might have more downside attached to it because of this clear negative divergence. We take a look at the Brazilian market, and we can see on the daily, after moving back above the 200-day moving average, the market went above it, came back, tested it, and now trading even higher. So the level to watch here as far as the Brazilian market is concerned is if it can continue holding above the recent daily closing high, and the level to watch there for the market to continue staying at least stable, if not healthy, is 49638.68, which happens to be the recent daily closing high. As long as the market is above that and holding above that, then this is a good action, suggesting that the market has really stabilized and is actually potentially preparing to go higher. Now we can take a look at the EWZ, the ETF that tracks the Brazilian market. And on the weekly, a little bit of a question mark here as to what it's trying to do on the weekly, because this was the break coming off the highs here, of those highs. And what's going on here is that week to week, the market is coming back to test that level. So you can see that we are coming back to test that red line. If we can't move above that red line, then obviously the next swing trade is going to have to be down. We take a look at the daily for the EWZ, and it too is breaking out above the $26 area. It needs to hold above that if this is to continue trading well. Now the problem is, if you take a look at the hourly, as we see in other markets, we see that it's made slight improvement in price, but that improvement in price has come at the expense of the RSI making a lower low. In fact, the RSI is coming back and testing the recent break here, and so that break also could be a problem. So net, if you take a look at the weekly chart, the way it's shaping up, and the hourly charts here, one can assume that around here it would make sense for a pullback based on negative divergence, based on resistance on this red line, and that would be consistent with the view that most markets in the short term look like they are set for a pullback. In fact, we conclude this video by taking a look at the S&P 500. And you can see for the S&P 500 also an improvement in price, but the RSI has not made a higher high. This negative divergence in the S&P 500 could also suggest that net the next swing trade for this market is potentially lower. Eric Muadeth, muadeth.com. Enjoy your weekend. Good luck, peace, and blessings. ESCS.